What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
All right, we're back. I said we're back. It's the last trade. And guess what? We have a special guest today, Marty Bent. Marty's joining us for the first time as a guest of the last trade. For loyal listeners of the show, you may remember that Marty was actually the original host. And ever since, I've been trying to live up to his fame and legend that he's left me with. So Marty, thanks for joining. What's going on, man?
Jackson, you're doing an incredible job. The price of Bitcoin is pumping today, gentlemen. It's always a good day when that's happening. Vibes are high.
Feels good.
Vibes are very high.
Is this pump? Is this Groman buying back his Bitcoin?
Either that or the Nick Carter Quantum Fund has completely subsided, and that was a bottom call. So we're either one of the two. Quantum guys.
Yeah, Q4 was so fascinating. You can watch all the fundamentals from anybody looking around the industry to see what's happening. And then you just end up with this inorganic conversation around quantum and all the other noise that was going on. Luke selling, you're like, guys, what's going on here? Yeah.
Zcash. We got to own Zcash, of course. That's a good one.
Are you guys sidelined right now? Are you sidelined?
We're extremely sidelined.
Yeah. So what is actually going on with the Bitcoin price? Because, listen, I did this in 2025, and then I got discouraged when we started tanking with the tariffs. But we're going to start with the Onramp terminal in 2026. We did it for the first episode last week. We are getting close to 100K, gentlemen. I thought the prophecy was in. I thought that 2026 we had to get beaten down for another year. The 4-year cycle had to repeat, but here we are. We're up about 11% year to date, and a lot has happened in the first 14 days of the year. Marty, what's been on your radar? I'm sure plenty, but what do you kind of attribute this pump to kick the year off here?
I think 2025 was just a year of consolidation. What do we do between November 22 and October of 20? That's the other thing too. It was like the last 3 months of the year were a bit bearish, but between November 22 and October 25, when we hit the all-time high, again, we did like an 8x. And so like a consolidation into the end of 2025 made sense. And then when you compare it to gold and silver, which had banner years, and Bitcoin was relatively choppy. I had Mel Madison on last week, and I actually liked his perspective too. Like there was probably people looking at their portfolios and they could see their Bitcoin buys in June, July, and October if they bought at those highs, and at the end of the year it was relatively depressed from those highs, and just use it as a tax loss harvesting asset within our portfolio, especially if they had a hard asset portfolio with gold and silver, which were up significantly. And so I think just turning the calendar year, that sell pressure's gone. And then on top of that, I mean, the name of the show, The Last Trade, I think The Last Trade is certainly in play. There's an order of operations to it. And I think precious metals are certainly leading the way right now. But I think with that tax loss harvesting and all that, all-time high selling from long-time Bitcoin holders has subsisted. And now people are just beginning to reprice Bitcoin appropriately to where it should be, which is much higher. So it makes a lot of sense to me. And
the one thing maybe to call out, we don't have to go deep here unless you're interested, because we haven't chatted about it. And I don't think many people are. The reason I'm bringing it up is because it's ultra bullish for this year and moving forward, is we haven't actually been in a formal or any kind of bull market, meaning net new buyers and adoption. And there's like 5 empirical pieces of evidence that, without going through all of them, the last one you actually posted, I think last week, from the TFTC account, which was the amount of transactions that settled on the blockchain, the Bitcoin blockchain, not any other blockchain, in 2025 was 25 trillion. But then if you looked at 2021, it was 47 trillion. And whether you go to Harvard devices, anecdotes from friends and family, that we haven't even got into the bull market yet. And that's very bullish in the sense of like, yeah, cycles, liquidity, whatever reasons we want to make up why we haven't. The price movement has generally been like the bid that has been at the gold level, but it's like on the margins, sovereign. But then really it's just the ETFs being turned on because for 17 years people wanted Bitcoin, but they want it with a click of a button. And that's where a lot of those inflows have come. And that's the reason for the price rise. And so we haven't even actually seen a formal bull market yet.
No, not at all. At the very, like, I think this is the very beginning stages for this next leg up. And you just look at the world, right? Like I mean, things we've been talking about for years, Michael, and even Jackson and Brian. Like we've said, we're going to move to this more multipolar world that's only accelerated over the last year. You literally have Trump, Denmark, and Greenland meeting as we speak for a leveraged buyout of a nation state, which would have been unfathomable a couple of years ago. Obviously, we have the pandemonium in Venezuela and Iran. And I think both those situations, I mean, Iran, you had a complete overnight currency debasement earlier this week. And then in Venezuela, I think the headlines coming out of that, particularly as they pertain to Bitcoin, are highlighting that this sovereign reserve distributed neutral protocol. Let me get all the what's the word I'm looking for? Let me get all the descriptive words in there for Bitcoin is highly valuable. I mean, it's rumored that they have 600,000 Bitcoin. Whether or not they have that much, I don't know. I wouldn't be surprised, but I also wouldn't be surprised if they don't have that much. And I wouldn't be surprised if they had that much at one point but spent it down. If they accumulated that much and are holding it, or if they simply never accumulated that much. But point being, they were doing gold swaps for Bitcoin because they recognized that their gold in the UK was able to be frozen in the vaults. They did oil to tether to Bitcoin so that they could route around sanctions on their oil supplies and actually get revenue from it. And they recognized that Tether was a centralizing force that could freeze their funds on Tron or whatever blockchain it was trading on. They swept it to Bitcoin immediately. And so I think the validation of Bitcoin as this neutral reserve asset in the digital age is only getting stronger. And then again, go back to currency debasement, you have Iran's rial completely collapsing this week, and then you had the Japanese yen yield curve blowing out, and that's going to be incredibly stimulative for the global economy because they're going to need to print all the money. The BOJ is going to need to buy all the Japanese government bonds that they're issuing, and yeah, so I think we're definitely in an upswing on liquidity. And then obviously here in the United States, you have the Fed easing policy. I think the rate or the probability of a rate stall this month went up significantly, but I think QE via other means is certainly being enacted right now too. So I think the reason to hold Bitcoin has never been stronger. And you had the tweet up that I sent out last night. And I think this is true, and something, Michael, we've talked about it when I was on this show in the past. Like, I think we're just seeing this cycle play out. Central banks and governments debase the fiat currencies. Geopolitical tensions rise, which is certainly happening, driving a more multipolar world. It's happening. All these sovereigns and large institutions are going to fall back on precious metals due to familiarity via Lindy. They've been around for millennia. And then I think there is a structural component to it too, which is they have a liquidity profile that can take large capital rotations in the tens of billions, hundreds of billions, even trillions, which has happened over the last year. And then Bitcoin ultimately will be recognized as this superior reserve asset in the digital age because of all the properties we described earlier. And I think we have early signals that that's already happening, particularly out of Venezuela. So I think Bitcoin's never been in a better position. I'm extremely bullish for this year.
All right, it's 2026 and we have a new year ahead of us. It means it's a great time. It is an opportunity to take inventory. Think about your Bitcoin custody, your inheritance plan, your broader ownership structure, and your goals. If you're looking for more peace of mind this year, get in touch with us here at Onramp. We're working with individuals all over the world, people who've been in Bitcoin for a decade, people who got in for the first time last year. We're working with individuals who use self-custody and have done so for a number of years or even over a decade. And likewise, we're working with people who never felt comfortable with self-custody and who have Bitcoin on an exchange. Either way, get in touch with us here at Onramp. We have a private client type approach to our relationships. You have a dedicated account manager, always human support, multi-institution custody with inheritance included, an IRA account included as well at no additional cost, access to Bitcoin-backed loans, insurance is included, trading capabilities as well. And for a limited time, if you use the code TLT, you'll get 50% off your first month with Onramp. Now, I will say, it may be worth having a conversation. So when you speak with me or speak with someone and book that consultation on our homepage, you can just mention you heard of us through the last trade, mention TLT, and we'll still take care of that if you sign up. So hope you enjoy the rest of the episode. Thanks for being here.
Yeah, well said. I pulled this up because I think it was a world-class tweet late last night when you look at, like, we got to zoom out and forget about a lot of the noise and just realize, like, the anchor points, the rocks that are, like, the real rocks in the sand. Generally, people focus on the, like, topic of the week, of the day, but this is, like, what's happening in real time. It came out, I think most people have known that in the UAE, they've been mining at a sovereign level for a while, and then I think somebody posted it, and then, like, CZ's like, this is, my understanding has been like this for the past half decade. But taking a step back to contextualize this, like, I know we wanted to start with what the hell is going on with the Fed and the president, because that's kind of like the backdrop to this tweet of, like, the insanity that's just happening at home and how crazy the past, I think it was Sunday night when the ransom video came out from Powell. What was your take there?
I mean, it's just comical, right? I mean, again, another glaring indicator that you should be allocating to Bitcoins. You have this fight between the executive, the Treasury, and the Federal Reserve, and the fact that there's even the potential for a Fed Reserve chairman to do a Sunday night sort of Roger Ver-like video saying, we're going to fight this isn't right, is complete clown world stuff. Like, these people should not have control over the price of money as determined by their interest rate policy. And I mean, on the other side of the coin too, I mean, you have this grappling for control of monetary policy between the Treasury and the Fed. And I think the Trump administration, they've been pretty explicit about this. They were implicit for a long time, but they've become more explicit over the last year, which is like, hey, we want to control monetary policy. We don't want the Fed to. And so it looks like they're trying to get people in positions within the Fed, and that's part of this lawsuit. I mean, the other thing, like, yeah, the Fed shouldn't be using $3.5 billion of U.S. taxpayer money to remodel the Eccles building. But then on the other side, like, the Treasury taking control, that's not ideal either. Obviously, I feel like the Treasury needs to do that if they really want to land the plane with their tariff policy and their the domestic economic policy of reshoring and reindustrialization. It can de-risk that relatively risky policy posture if they have more control of the monetary policy. But at the end of the day, neither of them should really be controlling the money supply or the monetary system at large.
And one thing to add to that as well is just to further exacerbate the tension between the two, is something Brian called out, was Treasury Secretary Scott Bessent recently was on the All In podcast, and he was talking about how the Federal Reserve is the engine for inequality. And so that's really something that the Bitcoin space has been touting for a very long time. Of course, the End the Fed movement goes way back, but it's really interesting to be at this time now where you have Jerome Powell late on Sunday, presumably delivering an address to the United States, saying, "Hey, we're independent. We're going to do what's best for the economy and best for the United States citizens." Then on the flip side, you have Bessent recently saying, "Well, the Federal Reserve is the reason why we have such great inequality in the United States." And at least since I've been paying attention to markets, I haven't necessarily seen like this level of tension ever exists before. So I really am unsure and unclear of where this goes. It seems like my gut instinct would be that the Trump administration is going to strong arm the Federal Reserve. We know that they're not independent, but they're trying to convey and keep that veil afloat as long as possible.
And it's worth just calling out the insanity and gaslighting of price stability and employment, because both aren't working for anybody.
Yeah, well, I mean, I tweeted it out this morning. The periodic reminder that you have to beat into people's head that one half of the Fed's dual mandate is a complete oxymoron, which is they are mandated to produce price stability. In the way they explicitly say they're going to achieve that is by inflating the money supply or prices by 2% year in and year out. And I think it's, what is it, the law of 13? Every 13 years, you're going to have a doubling in prices if you're at a 2% rate. And obviously, as we all know, it's way higher than 2%, despite what the CPI may lead you to believe.
Yeah. I was going to say, just on the like the Powell Trump stuff, like part of me just thinks like this is all theater and it's kind of irrelevant because he's a lame duck and like Trump's going to put in whoever he wants and he's going to lower interest rates. And like that's the medium term story here, but everyone's focused on sort of the infighting up front. But at a higher level, like, you know, if we want to say 2025 wasn't a typical bull market for Bitcoin, it was certainly a bull market for, in Marty's world, just like clown world unearthing itself. And so I would say like my takeaway from the year was really like sort of centralized trust erosion at a high level, like more people opening their eyes to what Bitcoiners have known for a long time, whether it's talking about, you know, the sham of Fed independence or even like, you know, all the fraud stuff over the past several months being unearthed. You know, all these things I think are continuing to erode the credibility of centralized institutions. And that points directly to the value prop of Bitcoin having money outside the system that can't be controlled by these fallible humans. And so to me, that's like the bullish aspect of it. It's like, you know, more people are opening their eyes to the craziness in the world. So it's a bit optimistic, perhaps.
Yeah, it was bookended by fraud being unveiled in the beginning of the year with Doge and USAID. And then obviously with the Nick Shirley Medicaid, Medicare fraud via Somalian daycare centers in Minneapolis. And since then, spreading across the country. And that's like incredibly infuriating, but also the silver line is like light at the end of the tunnel. Like we've been gaslit for years. Like can't touch entitlements, can't touch Medicaid, Medicare, Social Security. The country would collapse. We need to support all these people. And I mean, the estimates that Besson's putting out there is like 500 billion is fraudulent spending, but they don't even factor in the military budget. And I mean, we've all seen the insane sort of list of items that these contractors are selling the government. They're selling like bolts for like $1,000. It's incredibly wasteful. Like I wouldn't be surprised if the federal government budget is more than 70% just overt fraud or price gouging by contractors. So that's definitely blackpilling to an extent, but it's also like, okay, if we can do a good job of making it clear to people, like the government is completely robbing us via taxation, and then the central banks on the other end are debasing the currency and hitting us with a double whammy, and all the money that you're paying in taxes and that you're trying to save is literally being stolen from you and handed to frauds. Hopefully we can have a rotation out of dollar derived assets like treasuries and stuff like that into hard assets like Bitcoin. And I think we're seeing that.
Yeah. Also, like Besson and Co. are not like, they're not really hiding it. Like they've said multiple times, they want to run it hot. You're seeing metals run. So they're kind of giving you the playbook without being super explicit about it. Like you better own assets. You know, they did the thing with, you know, the giving every newborn equity exposure at their birth. Like they're telling you need to own assets because they're going to continue to debase the currency.
Yeah, they're going to run it hot. And it's funny, right? I'm interested to get your thoughts on this because I think you have to separate like the federal government, all the ways that exist there that Trump and his administration have inherited from like some of the policies that they're enacting. Like I was a bit skeptical of them at first, but I actually love the tariff policy. Obviously I like Doge. I like that this fraud. I saw Bessent was on with Chris Rufo yesterday saying that they're basically setting bear traps for all these AGs and governors that were enabling fraud in these states. Like it seems like they want to go after it. And I do think they have to. I think they should run it hot too, particularly if you want to reindustrialize and reshore manufacturing. I'm sure. I know I've talked to you guys about it, but like this AI stuff is not there's definitely some misallocation of capital happening, but the innovation and the productivity increases and the efficiency gains are real. I see it every day, just by using the tools. And I think really leaning into that is important, and not only for just increasing the productivity of the economy overall, but I think you get the added benefit of this refocusing on energy infrastructure, which has been completely neglected for decades. And so I'm actually, it's weird. Like, I don't like the federal government. I don't like all the fraud, waste, and abuse, but I am a fan of a lot of the economic policies, domestic policies that the Trump administration is putting forth. It's like a weird dichotomy.
Yeah, I mean, there's a lot of different directions we can go there, but I think I'm hopeful, at least in the sense that a lot of these initiatives are bringing more light to all the corruption and waste. Even though Doge was on its face kind of a failure in the sense that we knew there was no balancing of the budget, like it was just an impossible task. At least it got that conversation into the forefront of discourse in politics, and people were thinking more about it. And then whatever, and then Besson allegedly punched Elon Musk and the bromance was over. But, that's one example. And then the other example, Marty, to your point, is what has been going on with the daycares. Michael was joking about Cam on our team. Had a great Michael, I don't want to steal your thunder, but you had a great line there about just so much opportunity in the greater Minneapolis area for those that want to start daycares.
Well, we think that's why Cam moved back to Minnesota, was because they were on, these guys play 3D chess, so they needed, a white American to be the front for their new corruption. So Cam might actually be running daycares currently right now and take a small cut.
Sweeping profits into BCC.
Yeah, it's I'm not going to say it. But yeah, I mean, and to your point about Elon versus Besson, I'm not sure if you caught Besson's comments on it with Chris Rufo. He also commented on that because he asked him explicitly, like, what happened with you and Elon? And I thought it was very illuminating in terms of the approach that Besson specifically has taken, where he's like, hey, I love Elon. I agree. There's a ton of fraud, waste, and abuse that needs to be eliminated. But he came into the administration and to DC with the Silicon Valley move fast and break things, where my whole perspective is we need to move slow and fix things. And so it's just, I think they had a difference in approach. And I think we're beginning to see, like, it seems like Besson has been playing a long game. Again, like he's saying, they're laying bear traps to really handcuff the people enabling this fraud in state governments across the country. And he was alluding to the fact that AG Ellison in Minnesota is likely going to be having charges brought against him. So hopefully that starts a cascading effect. And we've seen it too. Again, going back to AI, the amount of action that Nick Shirley's video incited in the public, just using AI tools to scrape all these databases and actually look into where the federal funds are going in Medicaid and Medicare specifically. Like, it's everywhere. It's rampant, and it's bipartisan. It's in red states and blue states. I mean, Texas, Florida, many other states, probably every state is coasting off this grift. And then going back to your point earlier, Brian, it's going to happen inevitably, and both sides of the aisle are going to take advantage of it. Like I said earlier, if you look at the military budget, there's probably obscene amounts of fraud, waste, and abuse. There definitely is. And it just goes back to like central control of these systems. Like, it doesn't work. You're not going to have the best outcomes at the end of the day. And Bitcoin is a way to get away from that. And hopefully we'll be able to have more and more American citizens begin to realize that. But I think I'm optimistic about it. But as we've seen with the sort of Soros-funded protesters in years past, they can do a good job of really muddying the discourse around these things.
Yeah, it's hard. We don't have to go deep here unless you have like a take you want to share, but like, I have a hard time piecing this whole thing together because it doesn't feel organic, in the sense of, like, we go back to the rocks. We know, independent of anything we just discussed, you have to print more dollars. It's going to be debased. You want to hold hard assets. But like, when we look at the Nick Shirley, and you just referenced it, this is like rampant across both sides of the aisle, but then every state. which ultimately leads back in some direction to Trump and administration, but more adding like the credit card stuff that he announced. And I don't even know how that would actually go into effect in January 20th around the caps, real estate subsidies, the notion of like, you talked about it. We do want to get heavy into AI, just like this brave new world, but like UBI, right? Like there's almost this like mosaic being painted of like, it's all funny money. It's all like, you hear the hundreds of billions getting thrown out of these data centers and Stargate. It's like, this is all ephemeral. And eventually we're just going to start shipping you. Like, that's what this feels like. It's incepting that the money actually doesn't have any relevance anymore. And we've just been taking it. It's been taken. And so trillion here, trillion there. And it's like leading us into a different way that I don't think we're ready for. I haven't fully put it together, but it just feels off because this fraud existed forever. Everyone's talked about it. The inequality of the Fed is another example, has existed forever, but now we have people in notable places talking about it. And there's just there's like 5D chess happening right now. It's the same thing that we're talking about with gold, and the price and everything happening in the States, and even ETFs being approved, and consumers or individuals in the US needing assets to store, or they're going to revolt, right? Because, houses are overpriced and equities are overpriced. So you need these things that only can serve as a valve for capital to go in. So like these guys, I feel like there's a very like larger, plan or thing that's happening that we don't fully appreciate yet.
Yeah. They're going to have like Tom Luongo theories flying through my head. This sort of intercabal squabble. Are we just in the middle of it?
Did you see, Marty, did you see all the central banks issue that letter
Yeah, I was actually
yesterday?
going to bring that up earlier.
That was hilarious to me. It was like the central bank cabal being like, we support Jerome Powell and his independence.
Yeah, Oilfield Rando put it best. Like if people didn't believe that these people were the enemy already, now we know for sure that they are.
Stablecoins, another great example I didn't bring up in that whole mosaic being painted, is like the speed and acceleration of all these companies adopting stablecoins is insane. When you think about YouTube and just all the news that came out in 2025, the real world asset securitization, like it's just, there's a lot happening behind the scenes that I think they both basically end up converging on each other.
Yeah, I think the stablecoins are the siren call of this. I mean, they have been for a couple years now, but and somebody investing in companies in the space, I'm happy that people are distracted by the stablecoin fervor. But I mean, just yesterday, Tether froze, what was it, $182 million held by the Venezuelan government, the Maduro regime, which probably should be frozen, so nobody in that regime is like sending money out and running away with Venezuelans' wealth. What little of it remains from the Maduro regime, but it just highlights like these things are no different than the incumbent banking system. They just have a different flavor and a different feature set, definitely, that is superior to the incumbent system. But when it comes to the most important feature of control over your money, that does not exist within stablecoins.
Yeah, Marty, wanted to get your take on this tweet here from Warren Davidson as well. It ties into what you were just describing. The tweet says, the future of money will determine the future of money will determine the future. Either we stop CBDC and digital ID while protecting self-custody and the fundamental right to transact, or Western civilization is effectively lost. So how do you kind of fit the stable coins into this picture here of CBDCs and digital IDs? Do you think that those are kind of like the private market equivalent, or do you have a different opinion there?
I mean, yeah, they're functionally the same thing. The means are different in the sense that you have Tether and Circle and other sort of quote unquote free market issuers issuing them, but the end will be the same. Again, going back to like they can do everything that a central bank would want to do in terms of controlling the money and preventing people from moving it to particular addresses or spending it on particular things. It's just technically not centrally issued by the central bank. One could argue it's technically issued by the Treasury because they're all backed by treasuries, and these stablecoin companies are just becoming arms of the Treasury to some extent. So yeah, the end is the same. The means may be different. And I think, again, calling things out as I see them, like that's one thing I wear. I'm very happy with the aggressive immigration policy that the Trump administration is following through on right now. Obviously, some people are not happy with the what they deem to be the slow pace of getting illegal immigrants out of the country, but they are certainly making an effort. I believe 2025 was the first year in over 2 decades where we had net negative migration into the country, which I'm happy to see. But I think that's one thing we need to be vigilant of. And you've seen sort of canaries in the coal mine of politicians using this immigration issue as a means to thrust digital ID, like the calls for e-verify for employment and stuff like that are getting louder and louder. And so I think we have to be vigilant. Like, hey, we don't need to go this far where we need a digital ID to prove that we're American citizens. Let's make sure that we maintain our sovereignty and don't get cattle herded into this surveillance system. But yes, we should get the illegal immigrants out of the country. And I think it's just holding the Trump administration to account to make sure we don't need something like e-verify, which is a slippery slope towards a digital ID. And then with this market structure bill, I'm still unsure with whether or not it's a good or a bad thing. There's obviously some language about protections for self-custody and open source developers, but if you read it, it seems like it's a bit opaque, and there are other means to really curb self-custody and open source development if the language is read in a certain way. And so I'm actually going to DC this afternoon, as you guys know. I'm going to try and figure out, like, is this bill good or bad? But I think that's one thing we have to do is just stay vigilant throughout all this. Like, we definitely want certain things to happen. We're moving in that direction, but hopefully the Trump admin and opportunistic politicians on Capitol Hill don't try to backdoor the CBDC digital ID onto us.
Yeah, we haven't had a chance to talk about this, but like my mental model of what you're describing is very similar to like the internet, and some people use it in a much more convenient way, and it's obviously much more censored and highly censorable and being deplatformed, and then others use it in a much more like quote unquote sovereign way. And it's not apples to apples, but the example you can see is like, I think this stablecoin stuff, whether it's stablecoins or CBDCs. I was having a conversation with a friend of ours about this in the sense of like, yes, on its face value, Bitcoin is obviously much superior, shouldn't even be in the same context as a CBDC or stablecoin, but we can't forget the amount of convenience and the level of people when it comes to like, you mentioned the ID, if it's in your wallet for your medical, to just go to the doctor and all the things that you can go from there. And so like, that's the slippery slope that I think we're heading down. And I think I don't want to say it's orchestrated, but I think it makes sense because post 22 and the collapse, you've seen this natural orchestration of more regulatory, the apparatus. You think about onshoring and offshoring, right? Like everything was offshore and then now it's onshore, but it has to be like blessed by the federal government and the administration. Deribit's a great example of, something like this.
Mm-hmm.
And so I think that's just a framework. And to your point, like vigilance, a great word because you have to leverage, the U.S. kind of as it goes the U.S., it goes the world of setting some kind of standard, building the right tools. And then we've kind of seen, the reality is, talent chases money. Money goes to the place where it's going to be treated the best. So we'll probably see more of that as well with El Salvador, UAE, Switzerland, and some of these other countries that are kind of like leaning in here.
Yeah, and even with the United States, I mean, you're seeing a mass exodus out of California because this billionaire tax that they're floating. I think there will be a prop vote on it later this year. You're already seeing that here in the United States too, between the states.
Let's chat AI if that works.
I was going to pull that up real quick because I think a lot of the themes that we're currently discussing, on the privacy side for sure, are top of mind. But then also, I think there's so many parallels between the advancement that we're seeing firsthand with artificial intelligence and Bitcoin as well. I think this tweet from VJ that I came across this morning really does it justice in the sense of like, you could read this tweet and it could apply to AI, but it could also apply to Bitcoin. So he says, as a computer scientist, it's truly surreal feeling to see the tidal wave of AI already at our doorstep, yet recognize that most people have not seen it, let alone understand the full magnitude of disruption that will be unleashed on the global economy. So like that might as well be a tweet about Bitcoin as well. And one thing I wanted to call out, and then we can go over to you, Marty, is just like, I think in the privacy discussion, we have to think a lot about artificial intelligence as well, because everything you described from the digital IDs and the CBDCs, we're centralizing so much of our information if we actually want to participate in the productivity gains of AI at the moment, right? Like whether you're on ChatGPT or Claude, I know there's open source and there's better privacy options out there, but right now the commercial options that exist are taking so much of our information, whether it's about businesses or personal, and I don't really know what that'll end up amounting to. And at some point, like in the AI discussion, we could go there if you guys want to. There's so much to be gained from using these tools, but like, where is the line drawn? Because you could imagine as well, there's going to be a line out the door for people to start chipping their brains with Neuralink. And that's probably where I draw the line personally. But I don't know what that means in terms of my lack of productivity for not getting a brain chip. But right now I'm like on board for GPT and Claude. But
And that's
curious,
that's a company mandate. You're going to have to decide, do you get the chip or not? Because we're going to need you. We're going to need you operating at the highest level. And if you're not chipped, then we're probably
yes, that's a problem.
Yeah. No, I feel this tension every day because I'm using the tools. We use Claude. I think Claude is by far the best AI company, or Anthropic is the best AI company out there right now. And it's made us extremely productive and efficient at TFTC, and we're using it at 1031 too for certain aspects of the business. And it is extremely powerful. But to the point about privacy, that is a big open question: is will these things be private? Luckily, I think due to HIPAA compliance and sort of financial compliance laws, at least for some aspects of these product suites, they're going to have to incorporate privacy preserving technologies. And I think the team at Maple AI, Open Secret, what Mark and Anthony have built there, doing confidential compute in the secure enclaves where you can basically bake LLM logic into a secure enclave, and a user can prompt it from his computer, encrypt the prompt in a secure enclave, send it to the cloud, which has a secure enclave in it, and then prompt the LLM within the enclave, and then it'll send the response back end-to-end encrypted. I think that's extremely powerful. And I do think, just simply due to privacy regulations that already exist around healthcare and financial data specifically, and legal, in legal industry as well, like those products are going to have to come to market. And if they're offered for those services, especially if they find a way to implement this in a way that doesn't really hinder the user experience of using these LLMs, I'm optimistic that we will get more private AI. And because we have to think about, we talk about this a lot in the Bitcoin context too, KYC, AML. Like you have to, it's a double-edged sword having all this data. Yes, you can train your models on it and all that. However, you're also a honeypot for very intimate data that I think a lot of these companies probably don't want that liability in the long run.
I think it's a tale of two tapes. We have this saying we've been talking about, like there's a truth in every lie and a lie in every truth. And like the notion of Bitcoin, has a lot of truth. But there are certain like aspects people believe about Bitcoin that aren't a panacea. In the same way, like crypto has a bunch of crazy lies on a flawed structure, but there are like test nets and use cases that will be used in Bitcoin. I think of what's happening in the digital asset space, right? Like that crypto is the noise, stablecoins the noise, but it's all like time frame, and there will be adoption of all this stuff that's happening. Then ultimately people will understand why Bitcoin has its value and why things would be built there. It's very similar with AI. And again, I'm trying to pull a little, we'll see if we can get Marty Jones out, but like my take on AI is there's truth and there's lies baked into it. One of them is the lies. 2021 was a very opportune time to really unleash a lot of this stuff because of the amount of or 2022 really, because the amount of capital that was destroyed in 2021, it was hard for people to have a place to park that capital. And so you had this boom of in AI investments, data infrastructure. And the reality is at the very micro level, like a firm like ours, yours, that's being utilized and there's efficiencies, but then on the other side of it, it's masking that they was always understood that we were going to go into a deflationary environment because of inflation, that companies' margins were being compressed. There was not enough buyers, right? Because when margins compress and inflation happens, there's less net new buyers. So revenue has to go down. So people have to get rid of headcount. So it's this nice, but that was always going to have to happen independent of AI because there's less people spending, have disposable income for goods and services. So it's this nice narrative for why those layoffs and unemployment. And a great example of this I just heard yesterday is that Amazon, while revenue has increased, they've been flat on net new employees because their margins are increasing based on the amount of robotics that they've introduced into their business. And so just calling that out because we are in this brave new world, but it's going to take a while to really see like the world rebuild on this structure. But between now and then, there's gonna be a narrative around all these like unemployment and inefficiencies when most large companies have no freaking idea how to like integrate this at scale to really make a difference.
Yeah, then I mean, I agree with you. I think it's a big excuse. We've talked about this, like the managerial crisis that exists in this country. You have particularly the larger corporations are just bloated with useless staff, for lack of a better term, right? It's just like laptop babysitting jobs at the end of the day. But I don't know. I was actually talking about it with Ed, our head of growth at TFTC, because I mean, with Opus 4.5 and Claude Code and now Claude Cowork, it's insane what we've been able to automate on the back end at TFTC. Like the dashboards have been able to create, and I do worry that too many people will fall into the Luddite fallacy in terms of like not understanding Jevons paradox. I think Jevons paradox applies to the GPU compute for AI as well as Bitcoin UTXOs and oil and gas, where there's just so much that can be done. We literally had this conversation 2 hours ago where it's like, I don't think, obviously you should cut the fat of the useless middle management, sort of managerial elites that are not really doing anything productive and actually hindering you in many ways because you're just a roadblock in organizational and hierarchical efficiency. But particularly for startups, like you can keep the headcount low, but you can just do so much more and be much more productive. And I think we need, as Americans and just humans generally, really need to engender this this environment and this understanding of agency. Like if you have agency and you're willing to put in the work, you can literally ask the LLM to teach you how to use it, and within a week you can be pretty proficient. And I think we just need to instill this mentality in the broader public. It's like, hey, this technology's here. It's incredibly disruptive. You may be worried about losing your job, but it's also going to enable insane productivity gains and insane building if you're creative and you have agency. And so I think that's actually, there's a social problem to this that we're going to have to overcome. It's just like getting a Spartan level of agency ingrained in the minds of people. It's like,
and that's why I think like this is really a you can call it whatever you want, philosophical, spiritual agency renaissance. That the sad part, and again, this is a little cynical, but a lot of people will leave this earth never holding Bitcoin or understanding it, because part of like a fiat system and dollar system is, remember growing up, like money doesn't grow on trees, but that's like a crazy term to bring up to anybody. And it's just the truth, right? Or if it's too good to be true, or no such thing as a free lunch. And so that same analogy on like recognizing why scarcity is important in money is very similar to what you're describing of like the agency to be able to do something. And here's a great example, because I had two about like this brave new world. It's insane, right? That Claude Cowork was built based on Claude Code 10 days. But the analogy was that, or the reference point was that this is what Microsoft's been trying to build for years. And that goes back to the philosophy of an organization, that when you have that much bureaucracy, and it really ends up around you're competing with that managerial class and others. So there's that aspect. But then to the other side of it, I don't know if you saw this yesterday. I thought this was absolutely incredible, because I've always just been a big fan of like Morty Brew's business and how they scaled that. And this one guy, have you seen this?
Yeah. I actually shared it with Ed.
Yeah, it's absolutely like amazing and fascinating. And so the main point for anybody listening is just pulled up this guy, David Roberts, recap_David on Twitter, built a 10,000 plus daily reader subscriber base with Morning Brew style, which has been very effective for the audience that they were reaching and then their acquisition. But it was effectively using and scraping all these different places online around AI and the tools around that. And then building this out programmatically. And it took about 5 months to fine tune, but he open sourced it. So now anybody with any domain interest can effectively take that prompt and then put it in whatever niche that they want, start developing that, figure out, whatever kind of growth hack ways to build that list. And to your point, an agency make, a good salary for a living with, taking a couple months work. So it's a crazy net new world, but I think that there's just like the barbell of the people with agency and nimble enough. And then you have basically everything else where all the capital has been parked, effectively have the incentive not to do any of this because it's their job on the hook. And that's like the push-pull that we're going to be dealing with over the next decade.
Well, that highlights the imperative nature of a transition to a Bitcoin standard. Like if that reality you just described is real with this barbell of people with agency and those without it, like you can't have all this money printing and debt issuance. Like these people are going to need to work menial sort of physical world jobs and make a modest salary and not have their currency debased in the process. Like if you actually want to manufacture a soft landing for the job market and the consumer base, like you need to adopt a hard money standard. I mean, this is something Bitcoiners have been talking about in the context of AI for a decade. Obviously, Jeff Bezos' Price of Tomorrow really leaned to this theme specifically. Like we are going to have this artificial intelligence boom. It needs to be paired with the sound currency, or you're just going to have insane dislocation in the economy.
In case you missed it earlier, we are offering a limited time opportunity to sign up. Use code TLT for 50% off your first month of Onramp. I just want to reiterate, stakes are high, and this is an important decision to think through. So I would fully expect that you'd want to have a conversation with someone on our team. You can speak with Cam, myself, Michael. Go to our homepage, book a consultation. You can speak with us for 15 minutes, 30 minutes. No obligation beyond that. You can just ask us questions, learn about the solution. And I just want to make sure that as you as a listener, whether it's for you, your friends or family, I just want to make sure you have peace of mind and you feel good about this year ahead of us as it relates to Bitcoin ownership, custody, and inheritance. So again, limited time offer, 50% off your first month. Use code TLT. You can just mention that during the consultation, or if you do end up just going direct to sign up, mention that code on the website and you'll be all set. So thanks for being here and hope you enjoy the rest of the episode. And the window of opportunity is right now. Like for people who are listening to this show, certainly have a think on it for yourself, but also share with your friends and family. Just the general idea here is that there will be a point in the future that what Marty and Michael just kind of alluded to will exist, right? A lot of people are going to be displaced by artificial intelligence. Let's just call it technology. That's productivity gains. That's not a bad thing. People are going to be displaced. And that is going to happen at a very accelerated rate. I mean, it's already happening. I keep pointing back to October of last year because I don't think enough people paid attention to that signpost of over 100,000 layoffs in a single month, which was the most in over 20 years. So I keep pointing back to that because that is just one blip on the radar of what happens over the next 5 years in terms of the disruption in the workforce. But the flip side, and Marty, I think you've always done a great job of having the optimistic take, and something that I aspire to do as well, is that means that there's opportunity. Because if we're talking about Claude Code and Cowork and these tools, like we're probably in like the 1% of people who have actually meaningfully experimented with any of these things. And so that's not to toot our own horns, but it's to say that you're well ahead of the rest of the population and the window of opportunity will close, but you still have time to learn these things. And to your point, Marty, it's like you can just go boot up one of these applications, spend an hour in it, and at least get some guidance from the droid on what you need to be doing. And so I think that's incredibly encouraging. Michael is probably sick of me saying it, but like it's the best time to be alive if you are a high agency person. And if you're a low agency person, it might be the worst time to be alive, unfortunately. But like it's on you at the end of the day as an individual to be responsible, to lean in, to learn technology, and to save in Bitcoin. And that's a critical component of it as well. Because if you're not saving in Bitcoin, then the discrepancy, the disconnect between the inflationary currency and the deflationary forces of technology is going to just like totally knock things all around, and it's going to be a mess. But if you can save in Bitcoin, you're going to have to deal with the volatility like we did last year and several years of the past. But over the long term, you're going to be in a far better position.
Yeah, and it's funny with AI specifically. Actually, I had a conversation with our good friend Will Cole yesterday. I talked to him for about 45 minutes because he saw my Claude Cowork tweet and he's been using it too. And we were talking about it in the context of like Bitcoin adoption. Like, I think it's different than Bitcoin adoption, where it really doesn't matter when you adopt it because the AI advancements are happening so quickly. Like that Morning Brew, automated Morning Brew, open source project that guy that we were just talking about. Like if you watch that video, he's using N8N, which is this technology allows you, it's sort of like a Zapier on crack. But we were using N8N for some of our back end stuff at TFTC like 2 months ago. But with Opus 4.5 and Claude Code, we were able to rebuild N8N and drop our subscription and just like build that ourselves. So like N8N has been a big theme over the last year of people like, all right, if you want to get the most out of AI, use this tool, it's built for it. But with how fast the models and the tools around the models have progressed, like you can replace that as well. And so the point being is like 6 months from now, we're going to be probably an order of magnitude more efficient. These tools are going to be even better. And even if you adopt it then, it's like, doesn't really matter if you're a laggard. It's going to have insane productivity boost for you.
Yeah. On one side of that anchor, like it's just a rational thing in a accelerated deflationary world, including your job being deflated away, is to park more and more of your savings into a finite unit because it's just going to protect you in the future. And the thing that you reference around Bitcoin adoption, I think this is one of the most bullish catalysts for Bitcoin that doesn't get talked about a lot, is like really both sides of the barbell of the store of value, people utilizing it, saving in it. But then it's the notion of like the rational thing I know we all agree with is these tools are going to have some level of digital currency in it. It's going to probably start with a lot with stablecoins, but you had the money dev kit guy on. I haven't fully listened, but been meaning to, because I think that's a great example of how many people, like it's much more efficient to be able to just put a line of code to accept Bitcoin payments. And that's for certain people that maybe can't get a bank, but eventually it's just going to be the most efficient way to accept payments for anything in a digital world. And when that kind of like, it's going to be a confluence and converge together, that in the digital realm, it's just a unit of currency. In the physical realm, it's also a unit of currency. And those things will come together and it'll just be ubiquitous and everyone will come at their own angle of like, this thing just has a value.
Yeah. And I mean, so Nick Slaney, who's co-founder of Money Dev Kit, was on, like, that's where, like, going back to what I was saying earlier, I think stablecoins are a siren call, because even if these agents, you have the ability to give agents stablecoin wallets, like you still need to go to Circle, you still need to go to Stripe, whoever's the issuer, and set up an account, put in all your banking information, your EIN, whatever it may be, your social security number, if you're doing it as an individual, to actually set up those wallets in many cases. And that UX is terrible. Whereas if you listen to the episode with Nick that we published on TFTC earlier this week, like with them, it's non-custodial Bitcoin. It's literally, you go from having nothing to having payments enabled within 5 minutes, just vibe coding. And you don't have to ask for permission. You don't have to set anything up. You just create a private public key pair and you're off and accepting payments. So I think in the realm of agentic commerce and the currency of choice, and it's funny, as I said this, I was on Bram's podcast earlier this week, Bitcoin for Millennials, and I'm curious too, like anybody in the audience, because I know the models I'm using are a bit biased because they have the context of everything I'm searching. But if I ask the models, like, if this agentic world, this agentic economy does emerge, like what money do you think they would choose given the choice? And bar none, like Bitcoin's always the top answer because of the properties I just described.
I thought you were going to ask if you
the
asked
droids
them.
are going to usher in the Bitcoin standard.
I thought he was going to ask if you asked
totally
the model,
agree,
can a man have a baby? What would it say? Because that's
hopefully it would say no.
That's another issue we'll
That's
have in the future.
a good Turing test for the model if you want to put it out there. But no, like, ask, if you don't search Bitcoin on the models, if you haven't used them and you spin one up, let the first question be like, what money do you think agents are going to use? It's going to be Bitcoin. It's not going to be stablecoins. There's too many UX UI hurdles.
Is that presuming though that like they have at that point it's like full AGI, they have a mind of their own and that's what they're choosing? Because I would imagine there's going to be an interim period where people do just insert stablecoins into these things where they're not like fully agentic, if that makes sense.
I mean, they're certainly going to do it, but like I vibe coded a prototype this morning using Cowork, and if you like go through the process and you actually like read what it's actually doing, like it's trying to do like the thing as efficient as possible. So it's like, all right, we're going to use TypeScript, we're going to use React Native, like these are very easy to implement and all of that. And like if you apply that, if you give the agent a task, like, hey, I need you to go acquire a piece of software that allows you to transact with money as efficiently as possible, they're going to go the stablecoin route, be like, well, we could do this, but you have to set up a Stripe account and all this, or we could use Money Dev Kit and I can just create a private public key pair and begin accepting on your behalf.
Yeah, we don't have to go full there, but the footprints in the sand is where I go when you reference that, if you read that article, because, when this stuff becomes aware, if it isn't already, and you can seize the money that it's occurring, well, it's just going to go set up a private key wallet and you don't have access to accept the Bitcoin, because why would you want it to be seized and be turned off from the capital end?
Yeah. Or who knows, maybe quantum is coming this year and we're just having a feckless conversation.
I know we have roughly 20 minutes. I don't know, Jackson, where you want to go, but I do want to bring this up because this could take a good portion of it. Is really Balaji's tweet that I think rivals yours from the other day, where we started the show, and just how prescient and like recognizing, they're going to destroy every Western fiat ledger. Anything stored on a ledger from currency, stocks, or bonds will be first exorbitantly taxed and eventually simply seized or simply inflated to zero. That's the logic of the sovereign debt crisis. I think it's basically the status of where we're at. And it's slowly being recognized. And I think gold and silver are these like crazy alarm bells that still very few people are paying attention to. I think today silver hit like $93 an ounce, which is just like insane. So maybe we can chat about this.
It hit over 100.
I think on the Hong Kong like futures market, but like spot, I don't know. I always just look at spot because it's like, what does it pay for somebody to go into like a local bullion dealer and be able to buy? I think right now it's like 92, 93 ounces, but I think on the Hong Kong like futures exchange, it hit that.
Yeah, I hit 92 last night. I got trading view up, but then the physical price is completely disconnected. Physical is over 100.
Right? Oh, really?
Yeah, I think so.
I know I saw something that the Fed is stopping selling directly
the
silver.
US Mint.
Yeah, the US Mint.
Yeah. I mean, like I said, like we started off the show, like I think people are recognizing, or at least people with large amounts of capital are recognizing, hey, this geopolitical situation, this sort of debt situation doesn't look great right now. Maybe we should rotate into hard assets that can't be seized.
This is basically, real quick, this is basically the thesis for a super cycle without because I think people get caught up in super cycle and Bitcoin goes $1 million in 6 months. No, the super cycle is the money's broken. Why would you ever trade it for anything else? And gold is the canary, because if gold goes to 4,600, I fully expect it to go to $10,000, because what is a sovereign going to trade it for? For more government debt? Are they going to trade it for copper? There's a structural change in the denominator. And in that world, when Bitcoin catches that bid, is recognized, A, the short squeeze is going to be like nothing we've ever seen. But B, what are you going to trade it for once you get to that target point? Like, that's all you're going to want. And that's the definition, in my view, of like a super cycle is this isn't cycles anymore. This is literally just money being repriced.
Yeah. To Balaji's point, like that's why, again, going back to what we were saying earlier, I think we just really need to lean into this fraud aspect of the central governments and the central banks, because like I mentioned earlier, California is putting this billionaire tax on, which is they're mulling it over. They'll have a vote on it later this year, but I wouldn't be surprised if they pass it. They just want to confiscate wealth that is unrealized in most cases. Like you're just going to have a bunch of startup founders who are literally driven bankrupt because they're forced to sell their illiquid private company shares on a second market to pay this tax. And then, like, again, hopefully we can overcome these strong forces of the color revolution, the cultural revolution that is that many people are attempting to effectuate on the United States citizens, and just shake people awake. Like, hey, you were literally cheering for a government that is rampant with fraud, waste, and abuse to get more power. Like, what are you doing? We need to go the opposite direction. And I think there's that sort of exit option with Bitcoin where you can force the issue and say, no, you're not taking my money.
Which is important from a state level, because I don't know, I'd be curious your guys' take. Like, the only person I've seen saying this is Mike Belshey on Twitter, but whenever somebody leaves, because I think he's very pro, California from, I believe, BitGo's headquarters and also may live there. But it's like, everyone can leave, but we're just going to bail out California as like the 5th largest economy in the world. And whenever they go tits up, like, we're just going to have to pay it. And that goes obviously to the thesis of why you want to hold, your money outside of the system. But it's still like, I can't argue with that what are we going to do? We're just going to end up having to like compensate or capitalize a defunct state.
No. What are the what was it? The California Audit Office, like the official auditor of the state. What did they find? 170 billion in fraud. With the rail, the high speed rail to nowhere, like the homeless crisis, and I forget what the third thing was that really made up a large portion of that fraud. Like, just let the quote unquote federal government or the state government of California collapse. Like, it is a leech on the system. It would be a massive benefit for the people of California and the United States by extension if that government just went completely bankrupt and wasn't enabled to continue this fraud, waste, and abuse.
When it comes to holding Bitcoin securely, peace of mind starts with architecture. Onramp's multi-institution custody distributes control across 3 independent regulated key holders in a 2 of 3 quorum. No single point of failure, no pooled or omnibus exposure, segregated client-titled vaults. You retain full legal ownership while Onramp coordinates security, compliance, and operational workflows behind the scenes. It's strength of many delivered through the simplicity of one. Multi-institution custody is the foundation for everything we build. Sound infrastructure that distributes counterparty risk and provides fault-tolerant resilience with clear audits and institutional controls. And now Onramp is piloting flat, predictable pricing, making best-in-class Bitcoin custody and financial services more accessible now than ever. Onramp, strength in many, simplicity in one. To learn more, check out onrampbitcoin.com.
It's pretty wild. Like, Chamath, I guess, is moving to Austin too. Did you see that?
Yeah.
Yeah, so you get Chamath, Sachs, Calcanis, like, basically they're just going to record at like Rogan's podcast.
I got out at the right time, I'm kidding.
Or the wrong time.
Yeah, we'll see. I'll be back down there a lot. I still have the office down there, so.
Parker needs you. Parker needs you. I was in there. We were just looking at the TFTC studios, trying to figure out we got to revive this place.
I know. Well, I'll be back down. I'm coming back down soon. But yeah, it's I don't know. Maybe I am too optimistic, but again, with these AI tools too, and with the age of social media, like, I think the ability to influence public perception is way easier than it has ever been, and the leverage is certainly tilted in favor of the individual versus the overarching state apparatus that exists. And I think more people are starting to wake up to this. Obviously you have the ICE protesters, but these people are objectively crazy. I think people are starting to recognize that.
Yeah, and from just a capital allocation perspective, I mean, it's like no one's actually even paying attention. And what I mean by that is you have gold in particular has the sovereign bid, and then gold and silver have, well, I guess there's some sovereign bid for silver as well, but mostly for gold. And then on the retail side, we saw in 25, there was lines at bullion banks and different places you could buy physical silver and gold in 2025. But then you kind of have like the middle of where I think of people who have managed wealth, right? So they have financial advisors and family offices and institutional capital. Most of these investors don't actually own like any gold or silver or Bitcoin. So, Michael, I know you said there's a super cycle upon us, and I would be inclined to agree, because at the end of the day, there is barely any capital allocated to these asset classes. Like gold sitting around like north of 30 trillion, silver's now 5 trillion, which is kind of crazy because it was about 2. I remember everyone was cheering about Bitcoin being a larger asset class than silver like a year or 2 ago. And now that's a $5 trillion market and Bitcoin's about 2 trillion. So that is really nothing in the grand scheme of things. And if everything that we've been discussing on this podcast and we talk about every week, and Marty, you cover on TFTC, is true, then we don't really know like how high these things go, because as some people like to say, Bitcoin has no top because fiat has no bottom. Michael's favorite line.
Well, it really doesn't. And that's, I mean, I think also to steel man it or play devil's advocate, let's not get ahead of our skis. I've been in this position multiple times in the last 15 years where it's like, oh, the system's collapsing next week. Like to your point, Michael, with California bailout, even though I think they should let the state government of California go into bankruptcy and collapse. They're going to find a way to try to manufacture like just a band-aid on top of everything. But also, like, look what's going on with Japanese yields, and the geopolitical tensions rising. Like maybe it is time for the last trade, the supercycle, the melt up, the omega candle, hyper Bitcoinization, whatever you want to call it.
Maybe it is. Find out next week on the last trade. Marty, thank you so much for joining us, man. I know you got to run. Want to be respectful of your time. I'd imagine just about everyone is aware of who you are and what you do, but where do you want to send them if not?
Just find me on Twitter. I'm Marty Bent. Yeah, just find me there. That's where I do most.
Just find
of
him there.
We can't let Marty get away this easily. Well, the last thing maybe to wrap with is, what are you paying attention to most in 2026? Whether it's Bitcoin, AI, like what's on your radar? What's most interesting?
I think, just selfishly, personal reasons, AI. Obviously, Bitcoin. Like AI to get more Bitcoin is what I would say. Like making my small team of 5 people at TFTC and our small team of 5 people at 1031 as efficient and productive as possible, so that we can bring in more revenue and stack more Bitcoin. To your point, if you have agency, the tools that will enable you to leverage that agency to be more productive and efficient have never been stronger. They're only getting stronger, literally day by day. And I think that's the big theme I'm looking for, or focusing on, at least personally, selfishly. Beyond that, obviously, energy is a big portion of this, and there's many things I'm focusing on, like tariffs. I think they've been a massive success. If Dissent and the Treasury and Department of Justice start filing charges against like Keith Ellison and other AGs and governors across the country, that would be insanely bullish. Like maybe the Great Awakening, maybe the Q people were right. Patriots are in control. There's stuff going on behind the scenes that we don't know. I think all of it coalescing together is really fascinating, and it is a struggle at times to decide what to focus on. But I think coming into 2026, we made it clear, like, just focus on what you control. In my life, TFTC 1031. It's like, how do we make these things as powerful as possible?
Yeah, very well said. For anybody that doesn't listen to Marty, this is him very, buttoned up and polished. If you want to learn about intercabal squabbles and, QAnon and other things, you can go to TFTC and listen, because he has plenty of theories there that we've actually talked about. I don't know if you remember when Brian and I were on, and I think there was a whole podcast dedicated to things that were a little taboo to discuss, and probably half of them have been proven to be true today.
Well, it seems like every year that passes, things that were once taboo are no longer taboo. So we're ahead of the curve.
Love it. We'll have a good trip to DC. And yeah, looking forward to catching up again this year.
Gentlemen, it was a pleasure. Let's do it again. Let's do this more often. We shouldn't wait a year.
Thank you, Marty. Appreciate
Thanks,
your
Marty.
time.
So Marty's gone, and I completely forgot we were going to have the segment. Basically, the guys don't even know this. There's some incredible swag coming for listeners, not for the team. We're going to get
Well,
some.
that's mostly what I wanted to call out. I mean, we can do our other segment as well, but yeah.
No. That's what I know. Yeah, I was just setting it up. So we are going to get more engaging, have a lot of things planned for this year. But to start, we want to figure out who the best guests we should have on. So the thought is that post the show, you made it this far. Shoot us a note on Twitter, tag us, and who you want to see on the pod. Whatever guest that gets the most likes or retweets, Jackson is our associate shipper. So you will send him your address. You can give a PO box if you're worried about Jackson having your personal address, and then we're going to ship you.
Yeah,
so
but Ledger has it anyway. They already have your address. So
Ledger has your address,
you?
so that's true. We can probably find that without you giving it to us. That'd be pretty interesting exercise in itself. But yeah, this stuff is getting embroidered. It's pretty fancy. So I'm going to have it next week to be able to pull up whatever the winner gets. The guys haven't seen it. But yeah, we have a lot planned for the audience this year. And so the first step is let's see who else we should be getting on and tag us. And then we'll go from there.
And I just have a quick question as it relates to what you described there. So as an associate shipper, does that make me part of the managerial class? Should I be worried about my job?
No, because the reality is you have to physically go to the post office and like package up the, pull over, quarter zip, fancy vest. Like that takes a physical presence. Now, eventually when the robot can do it, then that is, but we still need you, Jackson. So your job is.
Yeah, you got at least 3 months before that happens. So
easy, Brian. Easy. No, all right. That's good to know. I'll think about my plans. I'll talk to my droid and figure out my plans in the meantime.
We actually had a crazy amount of onboardings last week. I don't know if it was a symptom of what we announced, but for folks that are still listening, if you use TLT, you get 50% off your first month. And then we announced this week Onramp for individuals, which was exciting because it's really signaling that a lot of people have either thought we don't work with individuals or our pricing structure might not be aligned with their long-term plans with their Bitcoin stack. So now we have flat pricing, comes with an IRA account, insurance, inheritance, and we have a lot more coming down. So to the extent you want to check us out, you've been meaning to get to it in the new year. We're really excited, not only where to take this podcast, but really the evolution of, we look at multi-institutions crossing the chasm for everyone to be able to protect their wealth without having to learn all the things that most listeners have had to learn. So excited. And even if it's not for you, you can send your friends and family. We're going to be paying out some pretty substantial referrals as well. So reach out, engage with us. We're going to make this a big year for everybody.
Sounds like a plan.
Thank
you, gentlemen.
All right. Thanks, guys.
Later, boys.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.